Hello and welcome back to the Geordie Pick Investor channel. Today we are going to look at, is GSK PLC stock a buy right now? What is GSK PLC? GlaxoSmithKline PLC is a healthcare company which engages in the research, development and manufacture of pharmaceutical, medicines, vaccines and consumer healthcare products. The firm researches and develops a range of products in three primary areas: pharmaceuticals, vaccines and consumer healthcare. Their products include tablets, creams, ornaments, inhalers, injectors, liquids and sterile products. Some key points about GSK is they are based in the United Kingdom. They are in the pharmaceuticals industry, have a market cap of 66 billion. They went public in 1972, have over 90,000 employees. Their dividend growth streak is 0 years right now, as they had a dividend cut lately. They have a 1-year dividend growth rate of 9.42% and a fairly good dividend yield at 3.77%. Their 1-year performance, they are actually up over 18% over the last 12 months. And today we're going to dive further into the company, have a look through their fundamentals and see if they are a buy right now. GSK earnings call and fundamental analysis. GSK reported a strong 2024 Q2 with 13% sales increase to 7.9 billion and a 21% rise in core operating profits to 2.5 billion. Across the board, GSK have had real strong performances. Specifically in medicines, they're up over 20%. Effective cost control improved margins and cash flow as well. And GSK has upgraded its 2024 guidance, now expecting 7 to 9% in sales growth and a massive 11 to 13% in core operations growth. Despite some short-term challenges, GSK remains upbeat about its future prospects. The company expects specialty medicines to grow by a mid to high teen percentage for the full year, and have also got a lot of other positions within the company where they are looking very, very strong, and their long-term profit is looking good. In their fundamental analysis, you can see that they currently have a positive free cash flow of 5.2 billion. They have a positive net income of 4 billion. Positive operating income at 7.6 billion, positive gross profit at 22.9 billion. They have exceptional ROE at 30%. They have high interest coverage at 11.5% coverage. They have low debt to equity at only 0.94. Solid long-term solvency. They have a little bit shaky short-term solvency, and they have positive net debt at 10.6 billion. Moving on to dive a little bit deeper into GSK's free cash flow, we can see with this graph how it has performed. Free cash flow is the money a company has left over after it's paid for all of its expenses and any investments it needs to make to keep the company running smoothly. Free cash flow is going to have a massive impact on what direction a company may be heading. If a company was to have negative free cash flow for a few years in a row, this would be a massive red flag for myself. On top of that, usually if free cash flow is diminishing year on year, that's also not a very good sign. From the graph, we can see that GSK has a pretty steady free cash flow when it comes to the last few years. With the company generating so much free cash flow, it being over 5 billion, I think it's shown promising signs to slowly build up their dividend streak and payments back up. I think that the pullback will actually serve the company really well long term, as with this pullback that they've recently had in terms of cutting their dividend, it was to invest that money in other areas of the business. As well as this, we've got to remember that I am a long-term investor, so I'm looking to hold these companies for 10 plus years. And as long as I see good fundamentals across the company, I know that over the next few years, as long as the core fundamentals stay as they are, the company's going to reap the rewards and hopefully have an increase in their share price. Because remember, although I am a dividend investor, it's still important to try and maximise the capital gains on every single purchase that you make, and I still want to be buying all of my companies at a good or reasonable price. GSK also has a free cash flow payout ratio of 58%, which means 42% can be used to buy back shares, increase that dividend payment, or pay off debt within the company. So I believe they are in a really strong position right now. Moving on, we're going to have a look at the discounted cash flow valuation, also known as the DCF valuation. The DCF valuation is a method of estimating the current value of a company based on projected future cash flows, adjusted for the time value of money. The DCF valuation process calculates the present value of a company's forecasted cash flow based on a selected operating model. Just a reminder, GSK's current price is 1,592 GBX, and when I plugged in a discounted rate at 8.4% with a terminal growth of negative 2.7%, GSK would be valued at 1,326 GBX, which would be an overvaluation of 17%. On the base case, we use a discounted rate of 8% and a terminal growth rate of 0%, and they were undervalued by 29%, being worth 2,258 GBX. And on the best case, when plugging in a discounted rate of 7.6% and a terminal growth rate of plus 2.7%, we can see they'd be undervalued by 64% and a best case price being 4,438 GPX. Alongside the DCF valuation, I do another valuation called the relative valuation, and from these two valuations we can come up with something called the intrinsic value. The relative valuation is a method used to value a company by comparing it to other competitors based on certain metrics. The metrics it uses includes EV to revenue, EV to EBITDA, and PE ratios. Specifically, these are the ones that I use, as you can use many different metrics when coming to a relative valuation. On the worst case scenario, GSK's relative valuation was worth 2,249 GBX, which would be an undervaluation of 29%. On the base case scenario, it came out of being worth 2,582 GBX, which was an undervaluation of 38%. And on the best case scenario, they'd be worth 2,935 GBX, which is an undervaluation of 46%. Moving on, like I just mentioned, we can then get the intrinsic value by adding these two together and dividing by 2. So the intrinsic value, on the worst case scenario, it was worth 1,787 GBX. On the average case scenario being worth 2,420 GBX. And on the best case scenario being worth 3,686 GBX. I then like to get a third valuation from the Wall Street estimates, because I believe by adding 3 different valuations together, I'm getting a very good all-round picture on what a company could be worth. The Wall Street estimates are an average estimate of a public company's quarterly earnings and revenues that leads to a valuation of that company. These numbers are forecasted by a company-specific analyst who provides research on that particular company and therefore comes up with what they believe is an accurate valuation. For a company the size of GSK, there are going to be multiple analysts looking through the company on a daily basis and coming up with these different valuations. On a worst case scenario, GSK was valued at 1,434 GBX, which would be a 10% downside. On the average case scenario, they believe that over the next year, GSK could be worth 1,905 GBX, which would be a 20% upside. And on the best case scenario, GSK was worth 2,688 GBX, which is a massive 69% upside. From this, if I remind you of GSK's price again, it being £15.92, also known as 1,592 GBX, we can then get our worst, average and best case scenarios of all 3 valuations put together. On the worst case scenario, GSK is worth £16.70. So by using a 10% margin of safety, you'd be looking to buy the GSK at £15.03. And with a 20% margin of safety, you'd be looking to buy GSK at £13.36. From the average case price, we can see it was valued at £22.48. So with a 10% margin of safety on the average case price, we'd be looking to buy at £20.23. Or if you wanted to use a 20% margin of safety, you could be looking to buy around about £17.98. And on the best case scenario, we can see that they were worth £33.54. So with a 10% margin of safety, you'd be looking to buy at £30.19. And with a 20% margin of safety, you'd be looking to buy at around about £26.84. Is GlaxoSmithKline PLC stock a buy right now? I think this is a great UK stock that is currently available at an attractive price. There are definitely some question marks over the company with that inconsistent dividend payment, but when I see how strong their core fundamentals are alongside being one of the biggest companies in the industry, I don't see them going anywhere anytime soon, and having that payout ratio under that 60% mark also means there's plenty of room for them to continue increasing dividend now over the next few years and hopefully get back on a decent dividend streak and continue building that dividend yield up as well. It's a stock that I'll be holding for 10 plus years, like I mentioned earlier, and with their core fundamentals being so strong, I don't see them being a sell anytime soon. I also see their current price being under my average case price using my 20% margin of safety, so it's actually at a very attractive price right now to potentially look to add to my current position. Are you going to be looking to buy GSK in your portfolio? What did you think about when they split with Haleon 2 years ago? Let me know in the comment section down below what stocks you'd like to see other breakdowns on. I hope you enjoyed the video. Please like and subscribe. Thanks for watching. This is the Geordie Pig Investor. Over and out.